Interestingly, many whales in the crypto space are anonymous. Like, we don't know precisely who these people are. I would say that they are probably the majority of them. Like, there are a lot of people that are worth, like 30, 40, 50 million, and no one knows their identity. And then there are some very, very well-known whales that, are also like constantly part of the public debate on Twitter or on other spaces. Probably the most famous one in this respect is Elon Musk. And then you have people like Michael Saylor and others. But basically, the point is that these people have literally like tons of money, and for this reason, and not only for this reason, they are also like immensely influential.
Welcome to Grokchain Conversations. This podcast is presented by a multidisciplinary group of legal, financial, and technology professionals to meet and discuss today's most pressing questions around the use and governance of the blockchain. Through roundtable dialogue, we will provide listeners with a full spectrum of views on where this technology is today and where it might be leading. The information provided on the Grokchain Conversations is for educational purposes only. The information provided does not constitute legal, investment, financial, tax, accounting, or any other professionally licensed advice. The views expressed here are those of the individuals, not those of their respective employers or Grokchain. This is episode 5, the topic of which is When the Whale Hunts You, the Specter of Manipulation in Blockchain Technologies.
Hello, everybody. Welcome to Grokchain Conversations. My name is Chris Ott. I'm joined here by the august panel of Grokchain Conversators. And what we're going to talk about today is what I've titled, perhaps too ambitiously, When the Whale Hunts You, the Specter of Manipulation in Blockchain Technologies. And now, what we're talking about here is the idea of a whale. And what I want to start off with is punching it over to Fab. And Fab, for these markets, for these technologies, what does a whale mean?
The term whale has been used in crypto since very early times, and in its like usual, most widely understood definition, it just means a person with a lot of money in crypto, basically, like a lot of work, like a person that possesses a lot of crypto. Obviously, what a lot of crypto means somehow translates, changes depending on also on the times. Like today we see whales that have an amount of crypto that is unbelievable, especially when you convert it to like dollars or fiat currencies. And these kind of holdings are increasing. But yeah, in its most general sense, it just means someone that has a lot of crypto, and for this reason, this has a lot of implications. Like, this person could, for instance, swing the markets by creating huge buy or sell orders on exchanges. Now, interestingly, many whales in the crypto space are anonymous. Like, we don't know precisely who these people are. I would say that they are probably the majority of them. Like, there are a lot of people that are worth, like 30, 40, 50 million, and no one knows their identity. And then there are some very, very well-known whales that, are also like constantly part of the public debate on Twitter or on other spaces. Probably the most famous one in this respect is Elon Musk. And then you have people like Michael Saylor and others. But basically, the point is that these people have literally like tons of money, and for this reason, and not only for this reason, they are also like immensely influential socially in the space. So like this year and last year, we witnessed multiple times, for instance, how Elon Musk was able to somehow swing the markets with just some tweets. There are other whales that are maybe a bit atypical, because usually we don't call them that way, but for instance, Vitalik Buterin can be considered a whale. Like he has an immense amount of ether, and he's usually influential in the community. And for instance, we witnessed a typical whale move from Vitalik, I think last year, when he basically dumped a boatload of Shiba Inu tokens, like effectively, making the price completely plummet and stuff like that. But yeah, this is the main definition I would give. Just like someone that, in a way or another has the ability to influence the market just because of the sheer amount of money they owe.
So typically, how did these whales get this money? Like, are they like you mentioned? Musk wasn't primarily a miner, but where how are they getting it? How are they getting into these markets?
So it really depends. There are different ways. So there are some whales that have just been into this ecosystem from the beginning. So maybe people that participated to the original sale of Ethereum, or with a lot of money, like I don't know, $1 million. Maybe they bought 1 million Ether when it was worth 20 cents, and now it's worth like $3,000. So it's just like a huge money multiplier. Then there is this point that the more you are, I don't know if it's true also for other markets, but the more you are in the crypto ecosystem, the more you understand how it works. So it's not just that some people were here since the beginning, but people that were here since the beginning had a consistent advantage in being able to understand which projects were worth investing in and which projects weren't. So, that's also another thing, that there are some particularly successful investors or traders in this space that maybe started with not much, but were able to, identify the good projects. And then there are people that are just like, very rich, maybe because they come from, I don't know, wealthy families, or they made their fortune in traditional markets, and they are thinking about entering the crypto space, or they enter the crypto space. And like if you are a billionaire, probably you won't enter the crypto space by buying 10K worth of Bitcoin. You will buy several millions or something like that. So yeah, we could consider whales, or like big investment firms, or like big venture capital groups that are investing a lot into this ecosystem. But yeah,
how about like a corporate entity like MicroStrategy? I'm sure they're not unique, who decides that they're going to put a certain amount of their operating cash in Bitcoin or crypto. Would they fall within that whale definition?
I would guess they do, in terms of how much like crypto they have, but probably this may just be my interpretation of it. Like in the like one of the things for me that characterizes the idea of a whale is that a whale is primarily, let's say, a private investor, or someone that is not necessarily bound to a particular internal workflow. So it's like I don't know how MicroStrategy works, but I don't think they can just decide to sell all their Bitcoin like in one go. I think they probably have investors. They have to ask for permission to, or stuff like that. Well, if I have 50 million of crypto, and that's just like my crypto, I can literally just sell it whenever I want. And this is also like the thing, like the reason why whales are important in the ecosystem, and everyone looks at them, is because of this kind of unpredictability that you have. Like whales may start selling for no reason whatsoever, at least apparent reason whatsoever. They may start buying, and indeed, for instance, many traders track whale transactions to try to understand, if the market is bullish or bearish. And the main idea there is that if you have built such a wealth in crypto, probably you have access to some alpha information that other people don't have easy access to. So, and by the way, the name whales comes from the fact that in the ocean, whales are big fishes and everyone else is smaller. So they are the ones that lead. ecosystem in this respect.
So Andre, how would you like enhance or amend what we're talking about on this whale front?
It's interesting that whales have played such an important role in the development of ecosystems that depend on decentralization. And like as the biggest players, they sort of are really not aligned with what we're trying to make. So we're trying to make a system where we have as many participants as possible, where governance is decentralized, where like every single individual cannot influence the whole system, but the whales, as an important part of the whole story in crypto, have had the capacity, by definition, of doing it the other way around. So they can influence the price. If we add governance to this, they can influence governance, even though this is a more complex topic. So it's interesting that the whole allure of crypto is also based on these mystical whales that can just sway markets with one hand. And then we have like positively playing whales who are whales by chance and who are trying to contribute to the ecosystem. And then we have people that are doing what, in my opinion, should be illegal practices, where they just use the fact that they can manipulate the market and make more money on this. And probably when we say a whale in a negative way in the industry, we're thinking of people which are pretty much performing scams. So what they do, so you make this huge sell wall, you create panic on the market. You might be able to also kill liquidity on a certain exchange or even in a market, and then you make this huge sway, which are by the market position because of the liquidity which is specific for the base, and all of a sudden you're able to accumulate at much lower prices. So this is definitely not legal in normal markets and shouldn't be legal here, but it's one of the traditional whale practices which have defined the space. Obviously, because we are a decentralized industry, there are ways to follow whales, and these practices are really followed. People can get information on this. As Fabrizio mentioned, like most traders really follow and report on whale action. So I think it has become a more complex game. But as you, Chris, mentioned, with the institutions coming in, they do have whale-like properties, and I agree. They, as Fabrizio said, they cannot do the same type of behavior that a more traditional whale would do, and which, in my opinion, is illegal. But they still can sway markets, and like a sailor can decide so he's been mostly pumping Bitcoin, but like the decision of MicroStrategy to sell 50 or 20 or 10% of their stash would have influence on the price. So but by this definition, so like having the capacity to influence the price and the amount of Bitcoin they're holding, they are whales, and this is developing now with governance tokens kicking in. There are additional ways where whales can influence, but again here it's whales by themselves are not enough for these systems to work. So they need the system to be sufficiently decentralized for people to buy in, for this to survive, to this to have resilience. So it's a game where whales can reap benefits from the fact that they have, let's say, a better position and the capacity to influence the market. But on the other hand, they also depend on the smaller fish. And Fabrizio used the word ecosystem, and it is an ecosystem. And whales by themselves cannot survive. So it's like it's a game. And for instance, in voting, it's pretty apparent. If someone misuses the voting power as a whale, this governance system becomes a charade, and it becomes hard, if not impossible, for the ecosystem to thrive or claim decentralization. So like Vitalik has been great about trying to lose his influence on his own project because of the fact that too much influence of a single person or of a couple of whales or people sort of kills the idea of decentralization. So I think that most of whales in the industry know this or have learned this. So it's like it's much more nuanced and complex. So it's not just like the whales playing the game and doing everything in crypto. No, I think that every user does bring value to the network, and okay, we do have some projects which are run specifically by a single group of whales, which are different, and I don't think we're discussing them today, but this is like these are the projects we usually call scams or not sufficiently decentralized or so on. But still, this whale as an icon that defined the industry is interesting, because it's such a prevalent presence in an industry which should be decentralized. So this will be a point to maybe for you, Alessandro, because to add.
Yeah, well, you can make whales in all sorts of different ways, and you can define them in many different ways, but at the end of the day, we're talking about a concentration of power, whether it's the token holder, someone who has a voice or a share of voice in the industry, a mining pool, or interestingly, there are organizations, companies out there who have developed wrap tokens. So they can concentrate their wealth, for example, by wrapping Bitcoin, but on the Ethereum chain, and having a concentration of power over Bitcoin, but through Ethereum, so with cross-chain transactions. In any market, if there's no liquidity, the market freezes up. And that's never good for market operations. The fact, for example, that there's a huge request for spot ETFs in this market it's very disturbing, because essentially the government.
Before you move on that, Alessandro, can you define for us what a spot ETF is?
Yeah, it's an electronically traded fund that will trade in the spot market only, not on futures of a particular asset.
So I'm sorry to interrupt again, but what is the spot market as we're defining?
The spot market is the immediate market. If you go to the market today and want to buy Bitcoin, you're paying at that particular moment, you're paying that particular price. You're not taking an option to buy it at a future price.
Yeah. Okay. Okay. Good. Thanks. So you were talking about why setting those up in this blockchain space would be concerning, Alessandro. Yeah.
Well, I think most governments have resisted the requests from the industry to set up these spot ETFs. And I think they've done so rightly, because they're essentially creating a whale. And this whale, who controls all of this, we'll call it native currency, can have influence not only over the market price, undue amount of influence over the market price if they so choose, but as my colleagues were saying before, this technology is constantly evolving. So there are systems where you have blockchain governance rights attached to a particular token, or the number of tokens you have. Like, same thing with the stock market. If you're a shareholder and you have a block of shares that you own, you can have influence over the company. The same thing happens in this industry if it's a distributed system, where as a whale, as a concentration of tokens, you can influence the evolution of that particular software. Not only through your voting rights, but also through the financing of the research and development of that software. And that's not healthy either, because you can end up in a situation where the software is no longer working for everybody. You also have the problem with mining pools. If you're a miner and you have a concentration of machines, and those machines are acting in such a way, in a collusive manner, they may decide not to upgrade their software, or they may decide to go off in another direction and create a fork, which then creates a level of insecurity within that particular network, because you've lost a whole bunch of machines. So, but I'd ask you, Chris, what do you think about these spot ETFs?
Well, it's a complex problem, echoing the problems I think each of us has raised so far, right? With the idea of Andrej's good point about how this is a decentralized technology that is venerating centralization in the hands of certain people. The spot ETF ostensibly would have some governance over it. That's part of why there's got to be government approval, there'd be some regulation, etc. But as we all know, the fact that something's regulated doesn't mean that it's going to act rationally or even legally, right? And the concentration of power in this technology has got real risks to it. From my own background, the worst abuses I've seen in what are kind of comparable markets I've mentioned before are things like penny stock or lightly traded securities, where somebody corners the market and then endeavors to kind of profit off their leverage. Even in that context, to go back to both Fab and Andrej's points, they have to rely on the little fish. The whales are still eating the krill, right? They need little fish to buy if it's a pump dump scheme or otherwise. There are a lot of dangers that come from people trying to corner markets. I'm reminded, I forget what the investment house was, but I think it was the 70s, early 80s, there's an attempt to corner the silver market, the commodity, and that ended up blowing up right in their faces, right? That's a regulated commodities market. You're dealing with silver, like gold. There are comparisons to at least the cryptocurrencies when it comes to those. The effects that had on the use of that durable metal as a medium of exchange for decades are fascinating to see. And that's what the dangers are. Dangers are ETF or personal. ETFs, a blended problem too, kind of like we were talking about Musk before. Some of his biggest moves haven't just been him. It's been him publicly saying through a tweet, well, Tesla is going to dump some of its Bitcoin to pay for a new factory, right? Although he's obviously the biggest fish in Tesla's publicly traded. They've got a lot of people and regulators to answer to, and that still happened, right? And it still happened, essentially by fiat, right? And it's not clear that there could be any consequences for that. It may not even be illegal, but it's concerning that there could be. It would be less concerning if it was just a corporate action. But there's this apex personality tweeting about it with an immediacy to his thinking that it is kind of stomach churning, right? That can have that kind of effect on this market. And the hope and the dream of how this technology would work would make it, you would hope that it would be a lot more durable and resistant to these swings, to these mood swings by a few people or entities. But the problem with the ETF could be very similar, depending. They'll have certain governance structures, but they might decide, well, we're going to start putting it all in pork bellies, right? or whatever the move is, and then it could tank these markets. It's a real concern. In general, I like there to be more regulation, but the danger for either corrupt or even just inattentive manipulation is concerning here. As long as these remain lightly traded, it's going to stay.
Yeah, well, you know, anything that's lightly traded is problematic because you do have those concentrations of wealth that can feed off of those, the krill, as you call them. But you know, even without getting to the to ETFs, you know, Fab mentioned something before about people buying, I think it was Ethereum at 20 cents. And that through a pre-sale, or, you know, but there's also the Genesis block, isn't there? A lot of these blockchain projects, they have a Genesis block where they're allocating X amount of tokens.
Yeah, Ethereum is one of those. So it's called pre-mining. Basically, the idea is that when the Ethereum project launched in 2014, you know, like they put out a white paper, but obviously the whole thing wasn't implemented yet. And indeed, the idea was to like have a crowdfunding where interested people could, you know, give some. I think they accepted Bitcoin by that back then. People would give some Bitcoin, and they would be allocated some Ether at a fixed price. Now, the allocation worked exactly in this way. Like at the Genesis block, they basically, when they finally launched the blockchain, they specified, you know, a sort of list of initial balances that were basically the people that took part to this crowdfunding.
Yeah, there are a lot of projects who, you know, basically serve themselves at the expense of the krill, giving themselves, you know, giving and keeping control over the project while trying to pretend that they're decentralized when in reality they're not, because they gave themselves a greater share of the tokens and consequently the voting share.
So this is very popular. This was very popular in the ICO craze of 2017, where basically everyone was trying to tokenize everything. And indeed, there was this behavior that many of these projects would pre-mine their tokens. And you know, the justification was, yeah, also Ethereum did that. So what's the problem? That's best practice, right? But what actually happens there is that you know, you pre-mine your tokens, and obviously you put a lot of tokens in the hands of the team. So the idea is that the team is paying itself, you know, before putting in the work. And obviously there have been a lot of rug pulls that basically means that the team runs away with the money, like dumps the tokens on the poor people that, you know, bought it. And yeah, a lot of different schemes have been considered for this. Like one popular scheme is gradual vesting, where, you know, it is true that they credit you with the tokens, like a Genesis block or whatever, but you cannot just like sell them all at once. Every fixed amount of time, you can sell, like a new portion of your portfolio becomes available to trade. And so they try to, you know, people try to mitigate these effects in this way. But yeah, it is true that basically a token sale done in the right way can create whales. Like if you have a good idea, and you know, like we saw it multiple times. We saw it with Cardano, we saw it with a lot of projects. And by the way, another way of creating whales that shouldn't be underestimated, it is via paid groups and via, I think they're called invite links or trade links. So there are basically a lot of influencers on crypto. Many of them are legit and many of them are awful. But especially the awful ones, you know, like they gave you trading suggestions and whatever, and they are not active traders. So one may think, how can these people make money? Where do these people make money? Well, the idea is that, you know, you can tell your followers to register to give an exchange, and to register, you use your like invite link. And basically, every time that people register using your link, you get a percentage depending on how much they trade and the conditions that the exchange set. But basically, in this way, there are people that accumulated literally millions and millions and millions of dollars by giving trading suggestions and not trading like 1 second of their life, which is actually very funny when you think about it. So that's another way. And this is like a sort of inverse whale effect. Like usually we think about whales as wealthy people that sometimes become influential because of this. These are like socially influential people that become whales because they are able to sell and market their influencing power. Yeah.
So again, concentration of power. In this case, it's influencer power as opposed to economic power.
Absolutely.
Yeah.
Even if that, in my opinion, that works well mainly for retail. Like obviously, like more institutional investors or like people with a lot of money to spend that want to enter this game are probably going to look for tailored and personalized advice, and you're not going to follow buying suggestions on Twitter.
Now, wasn't there a case of a blockchain network where I think it was the founder managed to get control over the voting rights of all the holders through the exchanges and basically took over the whole network?
That I don't remember. I don't know, Andre, if you.
No, I think he's referring to what Tron founder did for a project.
Yes, Tron. Yes.
Okay.
But it's not Tron. It's like he overtook chain and like.
Yeah, it was something else, but it was.
No, but so like without my mind working to say the exact case, what happened there was a big backlash from the community that forked. And that's the whole point. Like it's not about pre-mine. It's about how it plays out. So it needs to redistribute in a way, because like Bitcoiners always say, oh, the pre-mine. Like, come on, guys, like mining at the beginning, like also brought to crazy concentrations. So you can say that it's a much better way to distribute at the beginning, but what we're aiming at is like the future distribution, and it's like really it's important how it gets distributed. So like whilst I'm not sure about the actual legal aspects of pre-mines, and they need to be done in the right way, obviously, they're not necessarily bad, but they're like excessive cases where a single person misuses this, overtakes a network and so on. But again, it's a game, and as Chris said wonderfully, like whales cannot survive without krill. And that's the trick, like where there's an over abuse of power, then it's a rug pull. But the point of a rug pull is it's the end of the project.
One interesting thing regarding also what you said, and that it ties in with pre-mine, is that as like basically there are some projects that now they really don't want to do pre-mine because that's like a bad reputation in the space or whatever. But the funny thing is that there are some projects that launch on Twitter, basically, like they're a very small kind of niche kind of thing. They launch on Twitter and at some point become immensely popular, and that's where the whales like join, let's say institutional whales join in. So I think this is very important, because the point is that the social circles where krill feeds are not always the social circles where whales feed. So there are like very smart whales like Vitalik or Kubi that basically are deeply integrated like in the Twitter community, and they are always aware of the upcoming projects. But let's say if I am an institutional whale, and I think I have my team of analysts, and I'm not like looking on crypto Twitter to understand what I have to do or what I don't have to do, then probably you're going to miss, I don't know, like a lot of NFT projects that at some point become immensely valuable. So I think this is important, because there are some limited circumstances in which you basically like krill may have access to better information than whales. For instance, yeah. Sorry.
Go ahead, Fab. You had for instance.
For instance, if you think about the CryptoPunks, they've been around since 2019 and they exploded very recently. And as it often happens in crypto, you have like this kind of magic miracle kind of thing where someone bought like 10 CryptoPunks in 2019 thinking, oh, they're just like worth a few dollars and they look cute. And then, you just like created a new millionaire overnight out of nowhere. So yeah, that I think this is basically what keeps people like hopeful and interested in this space, even when you have all these whales coming in. You always have, compared like to traditional finance where sometimes investing is very difficult, there's a lot of red tape, you have to be like I think it's called a accredited investor, authorized investor, something like that, to invest in some very nice projects. There's no such thing in crypto, basically. And so you have really this feeling that if you are good enough in doing your due diligence and studying projects and looking around, then you can find something that will be worth a lot of money, and you will be very early when you invest in it.
Yeah, it's a complex ecosystem. To belabor my earlier point on the krill, one of the things that I like to do is go blue fishing, which you surf cast into the ocean, and you can't see the bluefish, right? But what you see is you see seagulls, and the seagulls are feeding on the minnows, which also get eaten by the bluefish, which, by the way, are all schooling around a shoal of krill. So the bigger fish go after the little fish, and you look for the things they're eating, those things. So that they're, but let me ask you this: are whales necessary in this ecosystem, or is it something we should be distributing out? I guess let me ask you, Andrej.
No, so that's a super interesting question. So like the ideal future of the centralized system would definitely have a much lesser influence of whales. So at some point they become an endangered species here. So we're far from that. But it's like, and probably people will say that yeah, that's the power, they will stay forever. But I wouldn't be so sure. So like I don't know. But it's interesting how this develops. We're still, and I'm not saying early like it's invest. No, it's like it's early because this is such a young industry, and I believe that whales will have less power, but in what form they will survive and how they have to act, it will be like make or break of crypto in some way, because we need to get decentralized more, and that means less influence for whales. So like in some way, I think they are probably now already at or past their peak. If we're going to make with this, like the scenario. So I believe in decentralization, and yes, I need to believe in it because like it's not factual at the moment. So all of the systems we're working on are at least somewhat centralized, and it's not just whales. So like it's a great question now. So yes, I don't know, but hopefully they get much less influence, and they maybe get to a phase like the real whales, which are pretty much endangered, like in our oceans. So. And not running the game,
which might not be the best outcome, but still, as an article of faith, that maybe whales shouldn't be in the crypto oceans. Alessandro, what's the business case for whales staying around?
Well, I think the business case is that if you want the software to evolve, if you want the industry to evolve, you need to have whales. You need to have people who are actually paying attention to what's going on, who have professionalized themselves, educated themselves. Because if you leave it just to the minnows or to the krill, they're just going to play with their limited amount, and they're going to be fearful about using that value to have the system evolve in some way or another, the network evolve, I should say. They're part of the ecosystem, and they're a necessary part in order for it to continue to grow and to evolve, because they're the ones who are financing the developers and the researchers. There's a It's kind of interesting. One person refers to it as the flywheel effect, but at the end of the day, it's a very interdependent market. Your miners depend on the developers. The users depend on the miners doing a good job. When you have a mining reward, you're receiving that as a miner or as a validator, and you want that value of that native token to be the highest possible. So it's in your interest to make sure that you're serving the users in a proper way so that you're maximizing the subsidy that you're getting from your mining reward or your validator reward. And your users want to make sure that their tokens are valuable, so they need to make sure that they're providing enough value, enough funding to the researchers and developers who are maintaining the system as time goes forward. So you do have a very, there's a reason why we use the word ecosystem to refer to these networks, because they are interdependent economic ecosystems. And if you have too much of a concentration of power in any one of these three areas, people can start manipulating, they can start being hesitant, they can, you create essentially cartels that don't serve anyone's interest except for one particular economic actor.
So do we rely on the benevolence of these whales, or do we regulate it? What's the future on it?
Well, I don't think you can regulate them. It's like saying, well, sorry, not to use an improper current event, but taxing people on their unrealized capital gains is kind of a little iffy. But then there are wealth taxes, for example. You have X amount of asset, and you have to pay X amount in taxes on the basis of your wealth, and the government then takes that wealth tax and funnels it back into the economy, supposedly. With these crypto economic systems, there is no government, there is no taxation. Well, some of them do. They do take a piece of the fee and they put it off into a treasury to finance future research and development. So they do kind of have a tax system, but not all of them do. And that's actually one of the biggest challenges in this industry from its birth, was that Bitcoin came onto the scene without any governance mechanism, without any way of funding the research and development. It was all basically left up to volunteers. But then as the industry, as Bitcoin started to mature, you started to get economic actors. I think one of them is called Bitstream. I think it's a Canadian company. They're very active, and they had to go to their investors and say, look, we want you to invest in this company, but please be aware, some of this money is going to just research and development. You won't see a return on investment. Some of it, there might be a return on investment, but we believe in Bitcoin, and we want to fund this. This is something that the founders had been working on for many, many years, if not decades, this electronic money idea. So there's always been this tension about how do you maintain these systems, because they're open source systems. They're not owned by anybody. How do you finance that research and development? How do you finance a security patch? How do you finance, just the evolution? Because, sorry, not to go off topic. None of the software or most of the software is not patented. It's open source and not patented. Some of it's patented and then released open source. But depending on where you are, patents have a 20 or 25-year shelf life. And when you're investing in a company, you look at how many years you have left on the patents that are in the patent portfolio of the company you're buying. In this case, there is no longevity. There is no lifetime set by nature or by law. So these are systems that are supposed to exist for multiple generations. So how do you finance that? How do you make sure that Bitcoin exists 150 years from now? Or, to use a colloquialism, the mining rewards will expire in 2140, I think, if I'm not mistaken. How do we finance the network until that date or past that date? You have to have the whales. You have to have somebody who has enough skin in the game and who has enough of an understanding of the technology in order to make sure that this system continues well into the future. Sorry, this network. I keep using the word system and I know I should. I'm sorry. It's network.
I don't agree.
You don't agree with what? Network or system, or what I just
said? With the necessity of whales. I don't agree with you both. I don't think that whales are necessary, and I don't think that they are getting weaker. I think they're getting stronger. I do agree with Andrej that we need an amount of financial decentralization to basically make the system resilient, and actually to enforce the system, so that the crypto ecosystem thrives on decentralization. But when you look at the overwhelming majority of the projects that are being released around, they are all highly financial, and they all follow the mantra that basically the more capital you have to invest, the bigger the rewards you will get. So from a genuinely mechanism design perspective, I don't think that the way the ecosystem is being implemented at the moment differs much from traditional finance, in the sense that it is fundamentally programmed to create a state of monopoly, where the more you have, the more you can get, because the more you can invest. The only difference with the traditional system, financial system at the moment, is that since this is very new, there are a lot of opportunities at the moment. So that's why people perceive that, this is radically different and it's enforcing the people. It is enforcing the people because the opportunities are so many that everyone has opportunities now. But as the system keeps growing, I don't see at the moment any reason why it shouldn't collapse to being the same of traditional finance, with a very few players having accumulated an unbelievable amount of wealth that they can invest into other projects. And then I do not buy into the theory that people that have skin in the game maintain the game stable. Actually, there are some exceptions, but the overwhelming majority of whales only care about one thing, that is making money. And you can be guaranteed that as soon as these people will realize that for a reason or another, crypto is not going to be rewarding anymore, it's not going to be profitable anymore, or maybe they figure out that there are other systems that are more profitable than crypto, they will gradually start leaving. And as it always happens in these circumstances, the people that hold the bag are the krill. So smart whales are always the first ones to leave and leave everyone else holding the bag. So actually, I don't think that the system is made more stable by the whales. I think the system is made more fragile in a way that no one really can foresee when this will happen. And I don't think you need whales to finance this infrastructure, because the main idea of blockchain is that it is a decentralized kind of system network that allows you to create complex mechanisms of coordination that are public. We are just seeing, in the last years, experimentation with DAOs where basically everyone can participate and sustain a system. Now, at the moment, DAOs are far from being efficient or optimal in many ways. But I think that, we could come up with increasingly refined coordination mechanisms where you don't need whales to finance something. I mean, in the end, when you take like 1 billion particles and you sum them up together, you get a whale, right, in terms of mass. So I really don't see any reason whatsoever why we should centralize so much money in the hands of very few people that then can take huge decisions and literally like destroy them or let some systems thrive. I think it's not healthy. I think it's not useful. And I don't think these people are getting weaker at the moment.
The centralization argument from an economic perspective kind of derives from the Silicon Valley approach. Have you guys ever seen or even read the Peter Thiel book, 0 to 1? In it, he's kind of describing how the only way to foster innovation is to give huge power and huge rewards to the people who've got money who can then foster the change. Now, I don't agree with Thiel on a number of fronts. this is another one of them. But that is kind of the operating model that, like, offline we're talking about venture capital firms that they operate on, right? They want to get they want to coalesce power and control over technology early, realize outsized rewards for it, and they say we're also kind of nurturing that technology, and that's how we get to the endpoint. It's the only way we get there. I think in reality, adoption of technology is a huge and complex process, and it's closer to a graft that they're describing than the actual business model, right? Like if you take things like the reason why cell phones are working so well now has to do with the combination of wide adoption and microengineering, right? Like it's tens of thousands of engineers who learn to keep on making these things smaller and more efficient. It's not necessarily the first insight in the 1940s patent that's pushing it forward, or even the initial investment into it. It's not to say these people aren't important, but I'm probably halfway between you two. Or at least the Thiel position and the Fab one, which is maybe there's some place for whales, but gosh, maybe there shouldn't be quite so many.
but that makes sense. Like Peter Thiel is literally like as right wing and as libertarian as a human being can possibly be, and he's like makes no secret of it, right? So it's totally compatible with his ideology and his stance. The idea that first come, first serve, and you have to accumulate all the power and all the wealth. I mean, I think it's very important to know that, among the people that Peter Thiel collaborates and confronts with, there are people like Curtis Yarving that are basically, neo-reactionaries that are advocating a future that they basically call, I think, Neofeudalism, in which state infrastructure is totally superseded by a kind of feudal system of private companies that
what's fascinating about it is on the fringes it ends up from the opposite direction, converging with some of the crypto ethos, right? Like it's
absolutely
the same inclusive perspective, but going the other direction, because Einstein's right, you eventually end up at a similar point, right?
But that's the thing, like the only
That's
thing
true
that
of a lot of things.
The only thing that everyone can agree with is that crypto is essentially an anarchist system. But now you can have, anarcho-capitalism or anarcho-communism. Like the point is how you implement this thing. Clearly, like if you adopt like a social Darwinism point of view, where basically the stronger thrives and the weaker dies, then you are getting Peter Thiel's vision, where you have to accumulate as much as possible as soon as possible. On the other hand, if you try to implement the system like going after an optic of constant redistribution. Like there are some proposed taxes, for instance, that basically disincentivate the idea of holding capital. So the idea is that you want to constantly like inject the capital into the economy because it becomes less and less worth while you hold it. So in this way, you enforce a constant redistribution, and like social mobility scales keeps running and stuff like that. So my point is really that these things are immensely impacted by the way you implement and set up the protocols at the beginning. My keys, my coins can become an extremely like crypto capitalist hyper libertarian doctrine, or it can become the closest thing to implementable socialism we ever saw. It really depends, how you bake in the financial payoffs in these systems. And this is also why I'm skeptical of whales and venture capitals, because in the end, when I invest in a company, I'm going to ask, how am I going to profit from this thing? So you will probably start, making demands to the people that implement the protocol to implement it using a mechanism design infrastructure that will favor their position in the future. There is this increasingly anti-VC movement in crypto that stems exactly from this. There are projects like Uniswap, where basically a VC puts some money, I don't know, 20 years ago, and they keep profiting from the fact that they put money in first, even if they contributed zero to the development of the environment and of the system in the last 10 years. So at some point, people in crypto started realizing that this is essentially a parasitic behavior, and they didn't want it around. And indeed, at the moment, there are many projects that do everything in their power to avoid getting VC funding. So then again, it depends how you engineer things. But I don't think that the current situation is the only possible one. And I think we could definitely improve in a system where, to a system where we don't need whales to take all the decisions, basically.
So essentially what you're saying is what we have today is a necessary evil because that's the way that we finance these projects. But we probably need to create a blockchain or a cryptocurrency that doesn't only sequence transactions, but is more in is not a general purpose blockchain, but is a specific purpose blockchain that allows you to finance the research and development of these networks.
Yeah, in part. I think this really ties into these discussions that me and you, Alessandro, had for a long time now, that at the moment, blockchain is heavily based on finance. And indeed, it would be way more interested to, use go after blockchains that are based on logic of productions. And as soon as you do that, then that's the question, who you are going to reward? The producers. Obviously, that seems the easiest and most obvious thing to do. Like if I do a blockchain that is based on people producing things, then you want that the people that produce these things are rewarded by this logic. And at this point, you see that every kind of financial layer on top of this becomes secondary, because as soon as the rewards stop going to the actual producers, like they have been in the real economy for some time now, they were going to migrate somewhere else. So yeah,
but that's the cool thing about these distributed systems is I have a machine, whether it's my home computer, a Raspberry Pi, or an ASICS machine that I can run software on, connect to the network without asking anybody any permission, participate, and because I run that software, I get compensated. I get compensated in a fee, and I get compensated through a reward.
Yeah.
Okay. If I can reproduce that and say, like with our Figaro project, sorry, I know we're getting off the point here, but of whales, but yeah, we went down this rabbit hole. where the producer, as you call him or her, sorry, can be compensated from some software that they're running on their cell phone. The value that is being created is going 95, 98% to the producer and not to the, we'll call it the capital owner.
Yes, this is the idea.
Right. Well, this is what we're working on with Andre.
But you see, like, my point is that in a system like this, you are really baking things at protocol level that basically disincentivate, like the idea of whale, because in the end, the way to accumulate more capital in this system is by producing, not by just having capital. I think, yeah. So, I mean, that's the thing. And yeah, I think that, by the way, one of the reasons why many whales were attracted to Bitcoin and crypto in general, but it's not a good thing, in my opinion, it's not. It's that, again, my keys, my coins basically means that it's way more difficult to seize your money. So, like, you can make a huge stash of money, and while government can basically freeze your bank account, they cannot really freeze your Bitcoin account. They can prosecute you and whatever, but they will not be able to siphon your Bitcoin out of your account. So yeah, in this respect, it's really like very kind of libertarian kind of thing, because the thing that many crypto protocols enforce more than anything else is ownership. And like the idea that ownership and properties are central to whatever we do is like the foundation of libertarian thought since the times of John Locke, basically.
No, I don't agree with that. It's productivity, but we'll debate that at another time.
Yeah,
we'll debate that. But at the end of the day, I think the whale that we did not define initially is the government, because at the end of the day, that the legislator, the regulator, is the biggest whale in the room, or in most cases, the Fed.
Yeah, and I would add another thing that might maybe help with all whales, even the governmental whale, is adoption, right? Like, a lot of the abuses we're talking about are the fact that these markets can be abused because there's asymmetries of control. There'll still be asymmetries if there's wider adoption.
There's information asymmetries is the most important one, because it's really hard to understand how these systems actually work.
Yeah. And so people have to get educated, but even just more and more stepwise moves to get more and more players into these markets and technologies is going to make them more durable to bad acts by whales. They'll be bigger animals in the ocean all the time, but they're less and less dangerous the deeper we make things. So that would be something else I'd add. Yeah, the governmental whale is kind of a longer discussion, but it is still a concentration of power. And the hope then is that the right systems are set up, to echo Fab's point, so that the government will act benevolently most of the time, right?
Well, I go back, I like to go back to the SEC's website and read their mandate. And that actually works well when we're discussing these issues, even starting projects in this space. You want to protect the investors, whether they're big or small. You want to have efficient markets, and you want to promote the formation of capital. Forget the Howey test. The Howey test is the wrong direction to go. If I have a blockchain or a crypto project, and I follow those 3 mandates of the SEC is going to leave me alone.
Well, I would write a much longer letter to get to the same point, I think. But that's my business model.
Yeah, but you're a lawyer. You live off of that.
Yeah. All right, then. I think we're at the end of our time, guys. Thanks for talking to us about whales. We'll talk again soon.
Thank you.
Very much.
Thank you. Bye.
Bye-bye.
Bye.